Open your phone, turn on the TV, or check a financial blog, and you are instantly hit with thousands of voices screaming contradictory instructions. Buy and hold. Day trade the momentum. Find deep value. Short the entire market. We are conditioned to believe a correct answer is buried somewhere in that noise, a single, mathematically pure equation that guarantees success for anyone who can solve it. But look at the people who actually extracted billions of dollars from the stock exchange floor. History's greatest investors built their fortunes using strategies that completely and utterly contradict each other. They succeeded because the market functions more like a spectrum of intervention than a math problem. Where an investor sits on this spectrum dictates the very rules of the reality they play by. Building a fortune ultimately depends on deciding exactly how much control you intend to exert over the market. On the far left of the spectrum sits zero intervention. Jack Bogle introduced the heresy that actively managing stocks leads almost exclusively to failure. Bogle argued that instead of paying high fees to find a winning needle in the market, simply buy the entire haystack. He created the index fund to do exactly that. This passive approach triggered the Vanguard effect, forcing down industry fees through sheer gravitational pressure. Bogle's strategy relies on the total surrender of control, placing a massive bet on market momentum. Moving up the spectrum brings us to analytical intervention, the domain of Benjamin Graham and his most famous disciple, Warren Buffett. These value investors wait for emotional market panic to misprice a fundamentally sound company. They look for moments to buy $1's worth of assets for 50 cents, then wait for the market to wake up. Peter Lynch added consumer observation to this tier, intervening by spotting 10-bagger growth stocks at the local mall years before Wall Street noticed them. To master this selection, Charlie Munger utilized a latticework of mental models, using tools from physics, biology, and psychology to avoid single-hammer thinking. For these analytical titans, intervention is an intellectual exploit. They don't change how a company operates, they simply profit from the market's temporary blindness. Further right on the spectrum, we find psychological intervention and its chief practitioner, George Soros. Soros rejected the efficient market machine, proposing the theory of reflexivity, the belief that participants' biased thinking actively alters economic reality. When enough people believe a trend, their collective action changes the fundamentals, creating massive boom cycles that eventually and violently burst. Soros focuses his intervention on these circular biases, ignoring the balance sheet to exploit the moments when the market's own delusions become unsustainable. At the extreme right edge of the spectrum, we arrive at hostile intervention, pioneered by Carl Icahn. Activist investors don't wait for value to reveal itself. They buy a minority stake, fire the board of directors, and force asset spin-offs or buybacks. This reputation created the Icahn lift, the surge in a stock's price caused by the mere anticipation of his ruthless involvement. At this end of the spectrum, investing is a contact sport. Value is created by bending corporations to the investor's will through brute force. An unbridgeable gulf exists between Jack Bogle's passive surrender and Carl Icahn's hostile destruction. Yet these titans share a single unifying trait, an unwavering discipline to the specific framework they chose. Ray Dalio codified this as his principles, a systematic way of dealing with reality without breaking character. Each billionaire selected a position on the spectrum that matched their personal temperament: Bogle's mathematical humility, Buffett's analytical patience, and Icahn's combative aggression. Charlie Munger identified this as the circle of competence, the necessity of knowing exactly what you understand and rigidly ignoring the rest. Wall Street eventually yields to those who identify a weapon that matches their temperament and maintain the discipline to